Greetings, Dr. Jeffrey Scott. This is my weekend market update for August 25th, 2024. Email address is hgsidoc@gmail.com. I've done these for over 20 years on a weekly basis. I'm here to show you my thoughts on the market. This is for educational purposes only. I titled this session Jackson Hole Optimism Drives a Broad-Based Advance. NVIDIA earnings on deck. We'll talk about the impact of that as we go forward. If you're new to my channel, hit the subscribe button, hit the alarm. You'll know when I post these. I do these because I like to. I don't charge money. I don't really have any services or mentoring that I do regularly or education. I do this to give back to all those that help me out. And so I post them whenever I have a chance. More about that as we go. If you have any comments, please either email me or put in the remarks section on YouTube. And if you like what I'm doing, tell me by giving me an up arrow. As always, this is for just education. I do have a lot of licenses. I'm an MD. I got board certification in internal medicine and medical oncology, but I have none of the licenses that would give me the right and privilege to tell you how to manage your money and how to manage your investments. I don't know your long-term objectives and goals. I don't know your capitalization size, so I can't really give individual investment advice. I'm independent. I pay for the tools that I'm using. My tools have been created for me by a number of creators, software developers, and I'm so thankful for that. And are available in the market. And trading involves risk, and you are solely responsible for any investment decisions you make. Busy weekend in the Scott house. Those who've been watching me for some time knew how attached I was to my Bishan, who died maybe 18 months ago at 16 years of age. One of the advantages of having an illness, which I've recovered and doing great from, thank you, is you get things that otherwise you weren't going to get. I got a new boat, which we've talked about, which is awesome, but I also got a new Bishan, so he's been keeping me busy. I forgot how much fun a puppy is, both fun and challenging. If you like these videos and you're challenged by the length of them, stocksanddocs.com is where I put out a daily video, usually in the 10-minute range. Depends on what's going on in the market. Major markets tell the story. You can see in the 5-day column a very bullish looking week. I'll show you how bullish. Look at Russell. Now the good news is it was up 3.7% on the week, which is pretty darn awesome. Bad news is it all came on Friday, up 3.2. We'll take it. NYSE 1.8, Spiders 1.4, NASDAQ 1.4, Dow 1.3, and the Qs 1. The equal weighted versions of the Qs were up a little bit higher, 1.2 on the week, and the equal weighted S&P was up 2.1, hitting all-time highs. And the interesting cup and handle pattern on the QQQEs. So very strong week for the broad markets. What I like to point out is I won't say this is an unloved bull market because I think people are enjoying it, but I do think it was an unrecognized bull market. The lows in the market pretty clearly in October of 2023, at least the last low. And if you look at less than a year since, and look at these returns, IWM 36, New York 30, Spider 37, NASDAQ 42, Diamonds 27, Qs 40. Those are massive returns. Massive, massive returns. If you look at the Spider ETFs, Spider components, you could see that the sectors, most of them outperformed the S&P 500, and the laggard on the week was energy. The Q Edge tool allows me to look at the S&P 1500. I use it real time as a heads-up display in the market, but it tells me some things about the market. And if I look back 10 days, and this is why my account's up a lot, I hope yours is up, 100% of the sectors were up, 96% of the industries were up, and 90% of the stocks were up. You know, many of us pride ourselves as being students of the market and having a good sense of what's going on and maybe being good stock pickers. But when the wind's at your back, as it's been over the last 2 weeks, it makes being long a whole lot easier and more successful. And if you look at the one-day performance, it is phenomenal. 99% of the industries, 93% of the stocks were up. Wow, what a strong week in the market. If we look at the market breadth tools from Sagar SuperiorProfit.co is Q Market Breadth powered by Metastock. You can see these little green outlines, 1, 2, and 3. That tells me we've had 3 eurekas in the last 10 bars or so. Very strong markets. If you look from this low here in April to the high in July, I don't see any eurekas. These magentas are the bearish equivalent. They're called phoenixes. What else do I notice? You see all these green dots that have occurred here, showing me accumulation in the markets. We hardly saw any green dots in this run up. So this is a very strong market we're in. I'm seeing lots of bullish signals. Stocks above the 10, above the 50 and above the 200 have both broken higher. That's good to see. And the one concerning thing is you can't see it because it's underneath this candle, but the 13-week new high-low indicator, which has been a reversal sign or at least a pause sign, is getting ripe. If we break out the NASDAQ and the NYSE, you can see the Phoenix on the NASDAQ, and the 13 week's not a problem, but look at where the 13-week is on the NYSE. It's living at a extended level. So I would expect something to happen. Does it happen before NVIDIA and NVIDIA rescues us? Does NVIDIA sink the market? But I think we're ripe for a pullback or a sideways move just because we've run so much and we're getting stretched. If we look at the components, you could see that the diamonds, the Russell, the S&P 1500 and the 500 are all extended. Interestingly, the big cap NASDAQ 100 cap weighted index, that guy is actually lagging right now. Interesting, because this was such a leader. The MAG 7, the MAG 8, FANG, all those stocks. The rest of the market is caught up. Nick Drendel has this great tool on one of my other screens, another heads-up display, and it allows me to see what's going on in the market. We can see the outperformance of the Russell on Friday. We can see we closed in the upper part of the range. All the major indices are above their moving averages and upward slopes. We like to see that, don't we? We look down here at the new high, new lows. Wow, almost new, the number of new lows is down. That's great. Highs up. If we look at what worked on Friday, solar, crypto, home builders love lower interest rates. In fact, on the week, home builders led up 7.9%. Rates fell as Powell signals a pivot. You could see the 30-year on the left, 10-year on the left was down 2%. The 30-year on the right was down a little bit over 1%. Falling rates are good for REITs, MLTs, utilities, dividend payers, and home builders. Interesting thing is the regional banks seem to like it as well. Is there a recession in our near future? Look at this 10 minus 2 yield curve. It's about to normalize. Does that happen this week, this month, or this year? I don't know when. But you could see the black line is the normalization line. The gray bars represent recessions. And after we normalize, after a period of time, we get a recession. So is there a recession in our near future? Maybe not near, but I suspect we'll see some kind of a slowdown maybe after the inauguration. The Philadelphia Fed Diffusion Index actually went negative, so that's a sign of slowdown, but there's no credit tightness. So I don't see or credit risk. I don't see an obvious recession to hit us tomorrow, but I think all the soft data that comes out on employment and manufacturing, those might be the bad days you see in the market. Because I think increasingly there's going to be fears about a recession. Breadth was great on the week. Stocks above the 200, stocks above the 40 are getting to the point where you see reversals. And here's that 13-week new high, new low on the major markets, and it's up almost at a guaranteed reversal line. So doesn't have to happen. It can go further, but every other time it's gotten up to this level over the last 20 years, the market seems to have a sideways move to ease off some of the exuberance or to pull back. Just a thought. Current buckets, 84% of stocks are above the midline S&P 1500. Only about 9% are above the Bollinger Bands. Typically, that'll get to 30 or 40%. And so that Q Edge tool does this real time. It allows me to monitor it during the day and pick reversal times a lot closer. The Hindenburg, we're in triggered signals. I think the fact that we're hitting new highs or about to hit new highs sort of negate those, but I still leave them in the back of my mind. And the interesting thing is look at the number of new highs: 9.5 on the Nasdaq percent, 14.7 on the NYSE. Um, you know, all-time highs are built on the back of new highs, and those are strong. And you got 0.11% new lows on the NYSE, 1% on the Nasdaq. Very bullish posture. Too bullish? Might be. Markets approach all-time highs. You could see in the warehouse report where we look at stocks based upon their ERG. ERG is EPS rank, relative strength rank, and group rank. High growth is more to the right. Low growth is to the left. We take out the head and the tail because there's almost no stocks. So we look at the meat, which is pretty flat around a 3% return. Not a big variation by earnings. Some of the low relative strength stocks actually outperformed, so there still was some rotation going on, and you could see stocks that were accumulating the prior week actually underperformed those that had distributed. I have a lot of different groups that I track to see what's working, what's not working in the market. And when all you see is black, only two lines of red, the market's working. And just to give you a sense of where things were, um, let me get the S&P 500 is down here. Most of the groups I look at are growth. For example, the weekend review in IBD was up 2.27. The IBD 50 was up 2%, and the market surge now growth was up 1.98. My holdings going into the week, which are a lot of growth, were up 2.62. My list that I put together on the weekend for buys, it was a good week, was up 2.1%. Last week they were up even higher, but you don't go up every week. You certainly don't go up a ton every week. So good week in the market. So earnings and news. On the left, we got San Francisco Fed daily on Monday. I got Atlanta Fed on Wednesday, and I got Atlanta Fed on Thursday. At this point, I don't really expect them to say anything counter to what was said at Jackson Hole. I don't know any reason why a Fed head would want to talk down the interest in rates, although they may want to keep us thinking 25 basis points. Um, if you look on the right, you can see we got some Case-Shiller, we got some durable goods, we got jobless claims, GDP revisions, and then we got the important PCE complex, which we know the Fed looks at very closely. If we look at earnings, it's still a big earnings week, but let's just highlight the king. The king is NVIDIA, and just to give you a sense of the king, let me just take this and let me make it bigger so you could see it. Oh, come on. There's a place to make it bigger. Okay. Look at NVIDIA's earnings. This is a tool that I offer in TradingView, created by Praveen. And you could see over here, and now remember they had a 10-to-1 split, so the earnings don't look nearly as big numbers as $5 and $6, which they were when they were released. This is the growth, 400, 500%. My God, these are the surprises, the revenue growth, the surprises. They're due the 28th. Estimate is 65 cents. There must be a whisper number in the 70s. So I think a lot of eyes are going to be out on earnings. They're going to be out on revenue. We've heard from so many companies that they are continuing their big capital investments in um, in NVIDIA, in AI. So I think the one thing I'm concerned about is what happens with their new chip, which they've already talked about, which is running behind, and will that hurt the market? So we'll learn there. Another question would be, what about seasonality for NVIDIA? One of the favorite tools that I have inside wealth charts, and what wealth charts is got so much, but they actually have built-in seasonality. So I'm just going to type in NVIDIA here out of curiosity and see what the seasonality looks like over the last 10 years. So over the last 10 years, and I got to set this correct, So we are now in, let's go to the top, August. So we are pushed to, there we go, 28th. Let's look out maybe a month. So it's a neutral. Average return over the last 10 years from the 28th to the 25th. And we're not quite the 28th, so let me take it back to the 21st. Is 0.62, 6 to 4 winners, losers. You know, it's not the best seasonality, not bad seasonality. It's not like Netflix used to be in first quarter where it was up 17 out of 18 times with a big return. But so I don't see a big seasonality headwind here. It's going to be pretty critical, those earnings. I think we all know that. So, thoughts. Russell, as I showed you, the markets were much higher, rallied on Powell speak, broad-based participation. Um, All-time highs are in sight. Economic data suggests we're slowing down. Hopefully, the cuts that were coming will create a soft landing or no landing and no recession whatsoever. I'm long. I'll probably do something to hedge. I've got a pretty big position of NVIDIA. And yes, I wrote it down because of conviction and also because I want to have a NVIDIA position. And I gave it a lot of room because, hey, like most people, I paid a lot less money than it is today. If you've had NVIDIA for any length of time, you know what I mean. So let's go take a look at the charts. And the slideshow. Awesome. So let's start with my weekly timing model. This is a model that I follow pretty closely. The weekly gives me the wind at my back conviction. Notice we've been long since November 6th week in the spider, and despite the fact we've had little whipsaws, we have not closed below that 30-period WMA since then. And what a run you had if you've been long with me. As we look at the Qs, a little bit more whipsaw. We have a new buy signal that actually not the Qs. The Qs are still waiting, so the buy signal is not here. It's still the Qs are waiting for the bongo to turn green. The diamonds in a buy and the Russell in a buy as their bongos are green and prices above the WMA. We did recapture the WMA pretty strongly on the Q. So I see 3 buys and 1 leaning towards a buy conversion this week. So except for the fact that I know we're short-term extended, I see reasons to be excited to the long side. So I am long. Now let's look at the daily market timing model. And you can see the bongos are green for everybody. Price is above the WMA. So the daily model is long in all 4. So I got 4 buys on daily, 3 buys on weekly, 1 neutral. That's why I'm long the market. And that's why I'm bullish. Now the daily will give me warning signals early, and so I'll pay attention to it. But really, it's the weekly model that dictates most of my moves, and therefore, although I've given the tone of concern about potential being extended, I am still long this market, which has been a good thing. When you look at the weeklies just up here, you could see spiders are right off all-time highs. Looks to me like they're closing highs since this week did not close at that dashed line. The Qs are just off all-time highs. The diamonds are probably at all-time closing highs. Not all-time highs because you got a bar a couple weeks back that was higher, but we didn't close the week there. And the Russell is way off all-time highs. We have to go back quite a bit to even go find them. So you got to be bullish, I think, based upon what you see there. Cautiously bullish is probably the appropriate thing. Let's take a look at the 5-minute spiders. Let's blow it up. And what do we see on the week? So this is the open on the 19th. Let's put a line here just to look to the right. We never approached the prior week's close. That's a bullish sign in itself. You could see Monday we had a big bullish move. Tuesday was kind of sideways. Wednesday we trended higher. Thursday is the day we got some economic news that suggested potential slowdown. And then Thursday we had a big gap up in anticipation of the Fed, and I don't think he disappointed. And so we ended up much higher on Friday. If you look at all the markets together, you could actually see that leadership was in the small to mid caps here, and that the Nasdaq was the laggard. On the daily S&P, as we said, right off all-time highs. I mean, you got to be bullish here, in my opinion. You've got, let me just, my EMS is fired. I just think sometimes when I turn the thing on and off, I lose the, oh, the triangles are still here. Good. So where's my EMS signal? Got to be here a long time ago then. Huh, is it turned off? Oh, it's not turned on. Apply. All right, so my EMS signal, I see the sell. I wonder if there's a buy underneath here. I'm just looking for a signal that I know is there somewhere because it's on the other platforms I look at. Yep, there it is. There is my EMS sell. There's the wealth signal. There's the buy signal that I gave on the daily charts. Breaking out above prior resistance, breaking out of the flag. Gotta like where the SPY is. On Friday, it was up 1.06%. Strong week for the spiders. If we look at the Qs, a little bit of a laggard in that it's sort of going sideways on the 50, but on the right side. Up 1% on Friday after a weak Thursday. Kind of an indecision bar though. Not as bullish appearing as the spiders. Look at the diamonds. Look a lot like the spiders here, just below all-time highs. Broke out of this trend line. Gotta like it. Was up big, 1.07 on Friday. The Russell's the overall laggard, but doesn't look too laggardy on the short term. What a nice move off this bottom. Took out resistance here. As I said before, nowhere close to the all-time high that was set November 8th at 244, which isn't even on this chart. So plenty of room to run on the Russell to get to all-time highs, up 3% on Friday. And really, after all the comment about how narrow of a market this was and why that was a problem, how cool is to see the outperformance by the Russell. If we look at the weekly VIX, you'd expect it to be down. And, actually bounced. It was up 6.69. But I think part of the story with the VIX is it's just down to a place where it doesn't go much lower. And when you're $16 of a VIX, 10% move is $1.60. A 5% move is 80 cents. It's not a big move. Speaking of dollar continues to be weak, which is supporting the market, down 0.85%. Looking at commodities, dollar week, gold was up. Gold was up 1.16. Silver was up 3%. And notice how silver is now taken out. It is above the 50. Oil bounced a little bit on Friday, 2.68% between the 50 and the 200. And as we talked about, the 10-year was down 1.38% on Friday. I like to look at some of the breadth, and what we're going to see here is that we're still seeing strength of the equal weights on the spider and the Qs versus the parents. TLT versus SPY, I look for spikes here. The reason I look for those spikes, as we talk about every week, is that, let me just go to monthly and let's get us some more time. Because during times of recessions, you're going to see a spike of, here was 2020. Let's go back to 2008, 2009. Here is 2008, 2009. You see a spike of performance of bonds to stocks at times of recessions. We don't see that right now. If we look here, it's credit risk. We had a little bit of a bump, but that's come down. That's nice to see. Not too much else there. We look at the gamma, the guppy charts, just to get a sense of how we're performing. and we are well above the moving averages on all the majors, even the Russell, which has been a laggard. That's good. I look at the hourly sectors, ratio charts compared to the spider. I'm looking for leadership right now. Now, this is a broad-based mover in. Remember, these are spider ratio charts, so it's a sector to the spider, all except for this guy over here. And um, what I'm looking at is to see who's up in the upper right-hand corner showing sustained benefit, who's the lower right-hand corner sustained weakness, and then lots of blue or red at the end. Does anything stand out? Yeah, I mean, real estate, I like that because of this blue line. Let's see what biotech looks like. Like biotech, but this is a broad-based rally. And the laggards, probably energy, is no surprise. It's oil just bounced. So I don't see any dramatic outperformance of one versus the others. The weakness I see, real estate looks interesting here. Looking at the scanners, watch list, no, heat map is what I want. This is the S&P 500. So let's just look at some of the widely held stocks. We'll start here with Apple. Apple had a nice uptrend, really had a big pullback, got above the 50 here. My wealth signal, excuse me, the EMS signal came in here. It's had a nice move up, consolidating above the 50. Not sure that's a new buy signal, but it's a nice place to be holding. Tesla. Tesla's sitting right on the 50 after recovering after a pretty significant pullback below the 200. Well off its highs. Nvidia, love the chart, love the breakout, just don't love the fact it's got earnings coming this week, and that tells me you have to be at least aware. Meta platforms, the old Facebook, kind of in an area where it's topped before, and that's the one thing that I find concerning here. Um, Consolidating at all-time highs, well above the 50. Microsofty, sitting in between the 50 and the 200, not a lot of strength. Same thing with Amazon. AMD, I only show this because it really gave us a buy signal off this long-term support. And notice, even though it was below it, it closed above, and now it's fighting to get above the 200. It'll be interesting to see what happens with AMD. Google, stuck between the 50 and the 200. So which ones of these you got to like the most? Nvidia and probably Meta, but Meta, it's got to get out of its own place. SMCI shows you why you could be concerned about Nvidia, because SMCI their earnings look good, 6.25, but they did not beat estimates, and you could see they've dropped and struggled to come back. So we'll have to watch what happens. So that's sort of the broader market. If we look at Wealth Scanner to get a sense of what's working and how many things are above 800, you could see massive improvement. Lots of things above 800. Value, value, value. That's interesting. Industrials, mid caps, value, materials, dividend, communications, value, dividends, dividends, staples. So the market, that's a pretty defensive posture. I'd be much happier to see QQQs and LABU at the top. So maybe that should give me a little bit of pause in my bullish enthusiasm. I use the CAT scanner to find the stocks that I like. One of the problems right now is how many pullbacks and uptrends are we going to find after we've had such a big market move? Let's look and see. So what I've got is a scanner here within wealth charts. Um, I've got a scanner that is freestanding that will come to market at some point um, for TradingView users. I've got a tool inside TradeStation, but this is the granddaddy and the one that's certainly the easiest to use and one of my favorites. And if we look at Roku, well, here's a stock that's had a pretty big pullback, had a 4-dot move on Friday with a launch indicator from Rob. Here's where my EMS early signal fired. Relative strength OBV look good, not extended. I like the chart. I don't like where it's sitting below the 200. I'd probably wait and see if it closed above the 200. Workday, this one had massive response to earnings over the Thursday night, I think they were. Let's take a look. Beat by 6%. Uh, we use it at work. It's a great product. Um, so here's a stock that was in a downtrend, so it's clearly a laggard in this market. But look at this move, the volume closing above the 200, not extended, great relative strength at OBV. If I went long, I probably wouldn't let it get much below the 200, so that's still a potential 10, 12%. Alley, a little bit more attractive chart pattern because here's my big uptrend, pull back to the 50, and then a big move on Friday. Three dots, breakout, momentum, and volume. Relative strength and OBV look good, not extended. I will tell you that regional banks were all over my watch list for this coming week. Here is another one, Associated Bank Corp. I mean, you can see on the weekly, it's kind of been a sideways move, but sideways move to the up, pull back and a breakout with a well signal here on good volume, breakout momentum, relative strength, and OBV looks good. Bank of California, again, it's kind of sloppy looking, not a great trend, but is it breaking out from this choppy area? Might be interesting to watch. Three dots, volume breakout, momentum, relative strength, OBV looks good, not extended. Another one of the banks, I'm just looking at my list to my right. First Hawaii Bank, FHB. Big run up, pull back, and a breakout on Friday with three dots. So the banks look interesting. Now, everything associated with home building looks good. A lot of them are extended. This is builders first source. So this is construction in general, not just home building. Big pullback after a pretty massive uptrend and a nice breakout here. Volume breakout momentum coming out of a squeeze, not extended. Relative strength and OB look good. I like that one a lot. I mean, I've given up on worrying about fundamentals and growth rates, and I'm more a technical guy. Um, and this has been a leader, and it's a pretty clean breakout there. It's above the 200. In the home builders, you can see a lot of builders just look really good. Lennar breaking out to all-time highs, I believe. Is it extended? Not necessarily, but if you want something that hasn't broken out much, is KB Homes. And a lot of times these things will go in tandem, so it hasn't taken out this prior high, a couple of big volume days coming out of a squeeze. How about Pulte Homes? Breaking out to, if not all-time, near all-time highs. I bet it's all-time highs. Let's see. Yeah, I'm pretty sure those are all-time highs. So how about something like Home Depot? Even Home Depot is behaving nicely. So that's another sector that looks good. Now, I'm actually going on a cruise. All right, so I looked at Royal Caribbean, and these have done very well post COVID. And so you can see I've been watching it, and it broke out here. Hasn't moved much, but to me, it's at a great buy point. You have a launch indicator, not extended. Relative strength looks good. OBV is a little bit lagging. And then the other one that looked interesting when I looked at my big list of stocks this weekend, sorry for that, is Carnival? Forgot to write it down. So if Carnival takes out its 50 here, it had volume breakout momentum on Friday. Earnings were back here, had a made money versus losing. That's a huge beat. Relative strength and OBV look good. I like RCL more than I like Carnival. Carnival's a lot cheaper. What else did I like? Um, a lot of REITs looked good. No surprise with the rates coming down. And one that was interesting to me was Sabra Healthcare. Big uptrend, sideways move, and it looks like it's breaking out here. There's an EMS, volume, breakout momentum from a squeeze. Relative strength on OBV have to catch up. Sabra pays a 7.2% dividend. I don't know if you noticed that solar stocks on the Nick Drundle tool were up at the top. And among the solar stocks, I looked at a lot of them. And I think the one to me I like to set up here is First Solar. It's been an uptrend, pretty significant pullback. Took out the 50 on Friday, breakout momentum out of a squeeze. Relative strength and OBV look good. And that looks like one that is getting ready to run. Another in the REITs. This is a sustainable REIT. That pays, I think, about a 7% dividend. HA Sustainable Infrastructure. You can see the uptrend on the weekly chart. Big volume breakout on the daily. Volume breakout momentum, relative strength and OBV look good, not extended. Another financial stock that I liked was AX. Axos Financial. Uptrend, pull back to the 50 and a breakout on Friday with great relative strength OBV and not extended. I'm just looking, I put together a pretty big list. If you believe that crypto is about to make a move, then one of the ones that I like to play because it really gives outsized moves is a derivative play is MicroStrategy. Good volume, breakout momentum, relative strength and OBV look good, not extended. Another derivative, which I don't remember if I like the chart or not, was Hood. And Hood struggling at the 50, so I think I like MicroStrategy there better. And then another group that's looked interesting are some of the electrical. Hub is one. Now, very big pullback, massive uptrend, broke above the 50, broke above the 17, volume, breakout, relative strength and OBV catching up. So there are a lot of good looking stocks out there. Just going down the list to see if anything else. CBRE is another real estate stock. Big run up, pull back, breaking out. Not totally extended at 85. The asset managers, this is Blackstone. Had a nice breakout from you could draw a trend line here. Volume breakout momentum, relative strength and OBV look good. The one I'm in is KKR. And you'll see a very similar stock, nice run up as well. Some of the food stocks, Cheesecake Factory, I hate that place. I always eat too much and I fill up on their bread. Weekly shows a big uptrend, breaking out above the 50. Another one that I liked in this space was Wingstop, expensive stock. I don't know this from Adam, but big run up, pull back. I like things taking out the 50 on conviction with good volume, breakout momentum out of a squeeze, relative strength and OBV look good. So I've looked at a lot of stocks, and I wanted to do that today. Comment if you like me looking at stocks or you want me to just stick with the market analysis. We are in an interesting market here. Again, when you look at the performance off of the most recent lows, it's hard not to be impressed. I'll use that word. I think we have to also be aware that we are getting extended. There's always news risk. We've got big earnings risk with NVIDIA. But just look at these numbers in yellow. This has been a major bull. So my comments then to end. Market is strong as an ox here, and it wants to go higher. I think everybody in the world are going to be watching NVIDIA earnings, and it's a double-edged sword. If they do well, then there's a lot of people on the side that are going to probably buy. But there's a lot of people out there, myself included, that have NVIDIA from a much lower price. And if the narrative changes, people are going to take profits and it's going to come down. I'm hoping for strong earnings. If I was a betting man, I'd say they're there, but I'm going to probably put a hedge on my position going into their earnings anyways. And that hedge unfortunately will probably not be cheap. So have a great week in the markets, and college football starting. Fantasy football drafts have already occurred for the NFL. That's my favorite time of year, and we'll see you next week. Or I'll see you Tuesday morning on stocksanddocs.com.